Comprehensive Guide to Corporate Tax for Taxable Persons in the UAE. Taxable persons, including UAE-based companies and certain individuals engaged in business activities, are required to calculate and pay corporate tax on their taxable income. Here, taxable income refers to the entity's accounting income or net profit, with specific adjustments made according to the UAE corporate tax law to determine the final taxable amount. Corporate tax rates for taxable income. Corporate tax is imposed on taxable income at the following rates. 0% on the portion of taxable income that does not exceed AED 375,000. 9% on the portion of taxable income that exceeds AED 375,000. This tiered rate structure allows for a portion of income to be taxed at a preferential rate, effectively reducing the tax burden on smaller businesses and lower income entities. Example of corporate tax calculation. Consider a LLC, a limited liability company incorporated in the UAE. For the tax period ending in March 2025, a LLC reported a revenue of AED 8 million and expenses totaling AED 2 million. This resulted in a net profit of AED 6 million, as recorded in its financial statements. For a LLC, the taxable income is calculated based on the company's net profit, with adjustments made as per the corporate tax law. In this example, no specific tax adjustments are required, so a LLC's taxable income for the period is AED 6 million. Calculating a LLC's corporate tax liability. To determine the corporate tax liability for a LLC, the following calculation is applied. 1. Taxable income up to AED 375,000 at 0%. AED 375,000 by 0% is equal to AED 0. 2. Taxable income exceeding AED 375,000 at 9%. AED 6 million AED 375,000 x 9% is equal to AED 5,625,000 by 9% is equal to AED 506,250. Therefore, a LLC's corporate tax liability for this tax period is AED 506,250. To arrive at the final tax payable, a LLC must check for any applicable tax credits that may reduce its corporate tax liability in the UAE. Identifying taxable persons subject to corporate tax. The corporate tax law defines taxable persons to include 1. Juridical persons, companies and other legal entities established in the UAE. 2. Natural persons, individuals conducting business or commercial activities within the UAE. The UAE corporate tax regime excludes personal income from employment and certain other types of income for natural persons, ensuring that personal earnings remain outside the scope of corporate tax. This approach ensures equitable treatment between incorporated and unincorporated businesses managed by natural persons. Relief for small businesses and compliance obligations. Small businesses, including those operated by natural persons, may qualify for small business relief if they meet the specified criteria. Qualifying entities benefit from an exemption from corporate tax payments but are still obligated to comply with corporate tax law requirements. These obligations include registration for corporate tax, annual filing of a tax return, and maintenance of records and documents to support tax filings. Exempt persons under the corporate tax law. Certain categories of entities are granted exemption from corporate tax, provided they meet specific conditions. 1. Entities owned or controlled by the UAE federal or local governments. 2. Public benefit entities established for social welfare or public interest. 3. Oil and gas and other natural resource businesses, taxed separately at the emirate level. 4. Qualified pension, social security, and investment funds. Calculation of taxable income and adjustments. Taxable persons calculate their taxable income annually based on their accounting net profit or loss. This figure, obtained from their financial statements, serves as the foundation for calculating taxable income. Adjustments may be applied to exclude exempt income, limit deductions on specific expenditures, and account for tax losses that may be carried forward or transferred. The corporate tax regime mandates that transactions with related parties and connected persons follow the arm's length principle to ensure fair market value in related party transactions. Special corporate tax provisions for free zones and intragroup transactions. Certain qualifying free zone persons may benefit from a 0% corporate tax rate on income that meets the criteria for qualifying income. Additionally, targeted reliefs are available to exempt certain intragroup transactions from corporate tax, allowing businesses within the same corporate group to optimize their tax positions. In cases where businesses operate as groups of companies or partnerships, specific rules apply to manage the tax treatment, ensuring that the corporate tax obligations for each entity or partnership are met correctly. Filing and payment obligations for corporate tax. Taxable persons must follow a self-assessment approach to calculate their corporate tax liabilities. This requires 1. Annual submission of a tax return to the Federal Tax Authority, FTA. 2. Payment of the assessed corporate tax liability within 9 months following the close of the tax period. This self-assessment and timely payment mechanism ensures that taxable persons manage their tax responsibilities proactively while providing clear deadlines to support compliance with UAE tax regulations. Comprehensive Guide to Corporate Tax for Taxable Persons.